You're tuned into the It's Real podcast with your hosts, Kayla Calendar and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
It's episode 65 of the It's Real podcast. I'm Kayla Calendar, and I'm a mortgage lender.
And I'm Andrew Yagi. I'm a real estate agent.
Hey, Andy, how's it going today?
It's going good. Happy Monday, Kayla.
Happy Monday. Happy cold, freezing, negative 15 below Monday.
I know it's a little bit challenging, but you know what? Better days are coming. The days are getting longer. We're that much closer to spring. And I was just talking with one of my staff in the office here, just like how quick, spring will be here. And even, we were just talking about goals and dates and ramping up for the generally busy spring market. And March 1st is just around the corner.
It is. And I think too, it's like people sometimes take vacations this time of year. People are just really focused. I feel like January always flies by. And then next thing you know, it's like we're 60 days away from warmer temps, and temps where people get out and look at homes, and temps where like you can maybe go without a jacket, like exciting things, right?
Yeah, without a doubt.
Yeah, I love it. Well, what's new with you?
What is new with me? Not a lot. Just trying to, like we talked last week, trying to get all of our ducks in a row and, get refocused after we've moved away from eXp Realty as a brokerage and just, focusing on being more of an independent boutique brokerage. And, there are just so many little things, little details, systems, things that, oh man, we forgot about this, we forgot about that. So just really ironing those things out. I've been doing a little bit more flying, Kayla, kind of taking on a little bit more aviation in the new year to kind of match my goals. So I've been traveling a little bit, which is kind of fun. But yeah, otherwise just kind of nose to the grindstone and actually having a lot of people reaching out, kind of wanting to talk about spring and talk about their plans. How about you?
Love that. Yeah, we got to talk more about your flying. We went to the lake this weekend after a while. Tons of people out on the lake, ice fishing. It's just a very peaceful this time of year. So it's kind of nice to get out there and just kind of collect yourself. I do a lot of reading, things like that. So we went out there this weekend. I think last week I had 10 new buyers reach out to get approved. So probably within from like Wednesday to Saturday, I've seen such a push of people wanting to just talk, not necessarily buy today, but hey, it's a new year. I want to get talking and getting a plan together. So I, in the last week, have seen such an uptick in texts, Facebook messages, Snapchats, calls, emails, like every single way from LinkedIn, like all these other methods of reaching out to me. People are like, hey, I've heard of you. We've heard, hey, I've heard the podcast. I've heard my realtor referred you. So it's really cool to see people coming from all different areas and different sources. And so I'm preparing to kind of, meet with all of them this week. And my week's already just piled up with meetings, which is really incredible. Very fortunate.
No, that's really awesome. Good for you. Well, Speaking of clients and people reaching out and talking about the podcast, and I was flying this past weekend, and I was flying someone from the Twin Cities to Fargo, a group from Fargo, and it just met an individual for the first time, and he mentioned, kind of periodically watching our podcast. So kind of had already known who I was. So that was kind of a fun piece. And I'm really happy, Kayla, that you're having people reach out, and I'm happy on our end that we're seeing the same thing too. I think as a whole, this year could be another slower year, just as last year was. We had higher hopes, and I certainly have higher hopes for 25, but I think it could be challenging. And, so good to hear that people, have been reaching out. But as I see this article from our friends at Inman, that just came out right before the weekend, Kayla, talking about would-be homebuyers are still looking for conditions to improve. And they're certainly more hopeful that the economy is in the right track this year, but only 1 in 5 thought December was a good time to buy a home, according to a Fannie Mae survey.
1 in 5. I'm not surprised. I think that when we look at the last few years, we've been like, oh, it's going to be better next year. People, even though rates are, declining the way that we had anticipated, People are still buying. It's not preventing people from even refinancing. So I'm not surprised. I also think that this, time of year between November, December, January, it is a little quieter. So that doesn't surprise me. Like we talked about in the past, the holidays, people don't want to move and pack. It's a lot. It's a lot of emotions, and it's a lot to have your house staged to move and to be trudging in the snow around here anyway. So I'm not really surprised by that stat. How about you?
Yeah, I would say it's in line with what we've seen. I mean, again, from about August until I think like the second week of December was the busiest week that I saw since October. So it's not surprising. The article, Kayla goes on to talk about how seller sentiment also declined from November to December, but it did improve from a year ago. So 63% of those surveyed in December said it was a good time to sell. That was down from 64% in November and a 2024 peak of 67% in April. There was another kind of interesting article that kind of goes hand in hand with this, and it was a survey that Redfin did. And Redfin is a big real estate website portal. They're also a real estate brokerage. Redfin's survey showed that more than 1/3 of homeowners say they'll never sell. So 24% of home buyers plan to sell in 5 to 10 years, while just 8% plan to sell in 3 to 5, and 7% within the next 3 years. Homeowners are staying put because their home's paid off, or they just don't want to move. And then, Kayla, the affordability piece. Like we've seen and we've talked about in the past, how there are so many individuals that say, the cost to replace my house.
Yeah.
It's even though I do or need to or would like to downsize, like I can't afford to replace what I have.
Yeah. Yeah. It's more costly. It's, some of those people have it paid off. It's a pain in the butt to move. I'll be honest. Like if you've ever moved, it's difficult. And I think people are now, what I've seen in the last year or two is they're taking out maybe like a HELOC or a loan or cash, and they are essentially just making their home more beneficial, more livable, bigger, upgrading. Especially during COVID, we saw so many individuals realizing, oh my gosh, I need a home office. My goodness, I need a separate space for this or that or the other thing, or my house needs to be my oasis. We saw so many people trying to have create a gym in their home because the gym's closed, things like that. So I think that has trickled into this a little bit, where people are saying, you know what? I'm not going to go get a higher rate. I'm not going to, go through the hassle. If I want to make my current dwelling more livable, better, enjoyable, I'm just going to do that. I've seen more conversations like that than ever.
Yep, right on. No, and I think I've seen the same too. There are a lot of people are looking at, trying to work with what they have. And, my wife and I have even been having that conversation just as we kind of look and think, okay, the home we're in right now, we've been, in it for 6 years, and it's a great house, probably not our forever house, but, just kind of looking and trying to digest, wants versus needs, and looking at just the costs of everything. Which I'm acutely aware of as we're, diving in and building some spec homes. It does make for a tough conversation. So I can certainly appreciate how the consumer is feeling.
Well, and also in the Fargo, Moorhead, West Fargo, Horace area, I'm helping quite a few clients right now build out in Horace or in these newer developments. And, a lot of them are thinking, okay, this is the next step, is to build, because you can customize it. There are so many reasons to build new. There's so many. But some of the things that are preventing people from even taking that next step are the special assessments in Fargo that we see. I've got one that it can impact their payment. It's going to be about $10,000 a year just in special assessments. So, as people are considering, like, do I upgrade? Do I move? There are so many factors to consider. And I think just the cost in general, whether it's interest rate specials, appreciation, the cost to build in general, the cost to, appreciation, people are kind of just like, nah, I'm good. I'm going to upgrade. So that's just kind of what I've been seeing a lot of, Andy.
Yep, right on. I just listed a house in South Moorhead, in kind of an older established neighborhood, and the house is a great value, for the money, 5-bed, 2-bath. It's a split level, which isn't ideal for some people, but decent neighborhood, and could use a little bit of love, but very attractive, and no real specials. So that I think is weighing on people a lot more these days.
Well, and I think in general, we see everything else being more expensive. It's like when everything else is more expensive, it's really hard to justify the house being double what they're paying or double what they're used to. A lot of clients of mine are saying, Kayla, I can't wrap my brain around 3.5 to 5 or 3.5 to 7 or in general. And he's saying, I just can't grasp that. He's buying out in Colorado. He's looking to move and he's like, I just don't know if I can do it. But the alternative is to rent. And we all know what renting looks like for your budget and for your equity and for your generational wealth. So a lot of people are really just coming just to terms with it. Like this 6-7% is the new, and looking into 2025, Andy, I don't know if we're going to see much different.
Mm-hmm. I think you're right. Well, speaking of rent, Kayla, and just real estate in general, I think we'd be remiss if we didn't talk a little bit about what's going on out on the West Coast, out in California, and just the horrific wildfires, and not only displacing people, and all of the carnage and the deaths that have occurred, but also what it's doing to businesses, to jobs, and also to housing. And you picked out this article or had sent this to me, and unfortunate to see landlords are ripping off people, but I guess it comes down to supply and demand.
Yeah, I know in this article it talked about how people probably know who Jason Oppenheim is from Selling Sunset, right? Like a star, but he's talking about how he showed a client a property that they've been asking for 13 grand a month, and now they're asking for 23 grand. And so these landlords, and again, not all, we can't put them all in the same category, but they're taking advantage of this situation instead of helping out. And Andy, I can't imagine what these people are going through. And it's not just like a couple houses burned down. This is like a city. These are cities and your children's schools and your gas stations, your grocery stores. There's nothing left. And here these people are displaced and dealing with, what do I do now? And so I can't help but think about what's going to happen with rentals. What's going to happen with other surrounding cities around, the Palisades? What's going to happen to Fargo, North Dakota, or Fergus Falls, Minnesota? Are people going to, migrate here on top of just this incredibly difficult time that these people are dealing with? I can't help but wonder, what are they going to do? How is that going to impact where they live, where they, raise their children? It's all a big question mark at this point.
Right. Well, and even, there will be a trickle down effect just because you look at the cost of rebuilding, and we talk about people unable to replace what they have already. And then you throw insurance into the equation. And I know locally agents have been talking that I've, talked with that say, hey, this is going to affect us back here. And even you think about building supplies and materials, especially if some of these, tariffs kick in when Trump comes into office. It could be a real issue for those that are looking to build or do projects. I think, one, piece of consolation in this whole article, just the Attorney General is kind of cracking down on it and said, you can't do it. It's a crime punishable by up to a year in jail and fines, and really out there to protect those suffering from tragedy, outlining as well for businesses, it's illegal to hike prices more than 10%. So unfortunate to see some of it, but not unexpected. I found kind of I'll say a little bit more of a hopeful article, just because as it talks about, Kayla, the wildfires making the housing shortage worse. There are realtors that are banding together to help people out. And so it just talks about basically agents have gotten resourceful and just have circulated a Google Doc of available homes around the area, just to really kind of help people find somewhere. This talks, Kayla, about the fact that there obviously, just like everywhere else, there's not enough housing, especially affordable housing. And as of Friday, fire officials estimated that more than 10,000 single-family homes, apartment complexes, and other structures have been destroyed. LA metro area had almost a shortage of 337,000 homes even before that happened. Wow.
Isn't that wild? Great. 10,000. Can you imagine? Like, and and I don't know for sure, but are they, in hotels? Are they living with family? Are they, trying to grab up these rentals. I mean, think about that, 10,000 structures. And then people don't have the jobs if your company burned down. Like, it is just absolutely wild. And it's going to be now more than ever that they need our support. And so it's really cool to see those realtors banding together because, I mean, why not? I mean, the homes that they had listed, I'm sure, Andy, if you had homes listed and now they're gone, now your sellers don't have a house to sell. It's quite catastrophic. It really is.
Right. Absolutely. Well, Kayla, I want to shift our focus kind of back to talking about, the overall market, and then, want to talk a little bit about our local market, and we can, cover some statistics since the December stats are in. But first of all, everyone is wondering what's going on with rates. So you had passed along this article and talked about the jobs report and rates going up. Tell us about
Yeah. Yeah, I mean, essentially, as you can see here, the jobs report came out on Friday, and it's well above the forecasted amount. So I think it was about 164, 165,000, and instead we saw 256,000 jobs. So 100,000 more, quite wild. But ultimately, now we see an increase in interest rates. So I've had some clients that, for example, they wanted to wait. And we advise, we might see this, we could see this, it's a roll of the dice. And what we saw were rates increasing. And Andy, what I'm reading, what I'm hearing, what I'm seeing is that, there has been talk about potential cuts this year from the Fed, but there's a lot of conversation that rates might not be moving anywhere. So what we're seeing right now, I mean, if you pull up the rates today, Andy, you're going to see that currently they're in the high sixes, low sevens. Like, that's where they've been. And today, 7.24 is the 30-year national average for conventional conforming. 30-year FHA 6.5 roughly. So we're seeing an uptick in rates. And I think that this is just more proof that when you try to plan and play the game of the interest rate game and try to play that, my clients this week, I had 2 clients that would not lock, and now they're going to be having a higher payment. Now, could they come down in January again? Sure. We never really know. But what I'm seeing is the rates are not stopping individuals who are determined to purchase. They're moving forward. And if we look 2 years ago, we look 2 years back into 2023, we were seeing rates hovering around the same. So when you talked earlier about people kind of waiting to see what happens, by waiting, I think that all we can really see is by waiting, you're giving up the appreciation, you're giving up the equity, and instead you're paying much more 2 years later for the price of the home you could have had. Now, obviously, it's not the right time for everybody, and you can't just buy to buy, but seeing where rates are at today and what's been happening, it's a little depressing for clients, especially those that have been holding out for lower ones.
Mm-hmm. Yeah, it really is. Well, and we'll have to wait and see what happens this week too, Kayla, just because I think that we're going to be looking for some inflation reports as well. And, obviously, for those of you who follow the stock market and have investments out there, I mean, the market's been hit pretty hard. And even today kind of started off, I think, a little bit hard hit just by that jobs report and the treasury bill yield going up as well. And even those are a lot of people that invest in Bitcoin and cryptocurrency. This was do you have any Bitcoin, Kayla?
I don't. I'm willing to bet you do.
I've got a little bit, not a lot, but yeah, I've invested a little bit, and it's kind of interesting. I don't totally understand it, but just even looking at Bitcoin had hit a high of 106,000, and now it's at about 92,000. And even there have been some rumblings, about maybe a crash there as we're especially as the government, I think, has some crypto assets they had seized and had talked about, unloading them. But I don't know. I think, just like anything, like if you're investing, I think obviously with where we're at in life, I mean, you have to be smart about it, but we're investing for the future. Lord willing, we have, quite a number of years until we need our investments. But, and so the same thing with housing too.
Right.
You're diving into a house, and, if it makes sense for you and your family, or, if you've got a different scenario job wise, you're not buying for necessarily the short term. You need to look at it as more long-term, especially when it comes to rates, because there are going to be lesser rates one day, and you can always refinance.
Mm-hmm. Well, I always tell people too, if you're comfortable, if you feel good about this, if you're not tied down to a lease, if you're comfortable with this payment, essentially what you're giving up is that equity. And what you're giving up is, this house that you're buying today, in a year, it might be $10,000 more. Are you willing to pay that then? And I think that, clients are starting to just kind of come to terms with that a little bit more. But the conversations that I have with clients too, Andy, are, I know that this is a dwelling. I know that this is, a single family home, but I try to get to the pleasure points with people. Like, why do you want to have the home, or the pain points? So they're like, oh my gosh, my rent keeps going up. My dog doesn't have a yard. My children can't play outside. There's so many things that kind of trump like paying a little bit more for a house, but ultimately it has to make sense for the person. And my job, and this is something that I learned probably about 2 years ago, was it is my job to educate the client, to give them the good, the bad, the ugly, the great, and also to get them excited. Because I once was a first-time home buyer. I was scared to death. I had no idea what I was doing. And I look back and I'm like, I'm so grateful that I had a great lender at the time. Shout out Paul Canton, Choice Bank. He retired a while ago. But, I look back and thankfully I purchased at such a young age, and that got me to the stepping stone of taking those funds and putting it towards my down payment on a new build, things like that. And had I not felt good and confident from the lender, would I have felt good and confident? If my realtor and my lender were like, you can buy, I guess, but we have to be encouraging people to see the good, the bad, the indifferent, and share with them what that looks like. Ask them, what are your concerns with this? What are your fears? What are you excited about? Talk to your people, because when people are just getting a letter that says I'm approved for $300,000, they don't know the payment. They don't know their cash at close. They don't know the rent versus own calculation. They don't know what kind of equity they could have in a year. They don't know the tax benefits. Why would they want to buy and spend more money when they could stick in a rental and just be okay and not move? So I digress, but I think we need to empower our people.
Mm-hmm. Yeah, absolutely. And I think that's what it's all about, empowering people to reach their goals and do so knowledgeably.
Right. And also, like, I'll say it once, I'll say it again, is I'll look at someone's credit and I'll say, wow, you're paying that much for a truck payment. What's your interest rate? And they tell me it's 20 some percent, Andy. And I'm like, okay, is there a way to refinance that and maybe free up some cash flow so that you can afford the home that you really want? And so we as lenders also need to be very strategic in helping clients see the big picture that maybe they don't see themselves.
Mm-hmm. Yep, right on. Right on. I love it. I love it. I love your passion, for mortgage. And obviously, I think some of it comes down to, you talked about your experience with your first lender at Choice, and just how that was really good. And so I think you probably picked up a lot of positives, which you're transferring to your clients as well.
Yeah. Yeah. And also just showing people it's not as intimidating or hard as you may think. And there are less qualified people buying homes than you. So you might think you're not qualified, or maybe you're too young, or maybe you shouldn't buy now, but there are people that are making it happen. That I think I told you this. I helped a client that was 21 years old in November buy his first home, and he's creating equity. And then I think the average age of the first time home buyer, Andy, right now is, I think it is 36 years old.
Sure.
I mean, that just kind of shows, people starting younger, but some are holding off too.
Mm-hmm. Yeah, no, right on. Yeah, that's very, very wise words of wisdom as usual, Kayla. I think, kind of segueing in, but, working off of what you just talked about with, providing good guidance to clients, and just the fact that, hey, now is a good time to buy if it makes sense for you, just because there's less competition. I'm somewhat surprised. So Kayla, I was just looking at the December statistics for both of our markets. So this is the residential market summary for December. So we saw more listings in Fargo year over year. So, end of last year, there were maybe 290, and, you ended the year with 400. So, hey, that's more favorable for buyers. The other thing that's really favorable, Kayla, is just the fact that the sold to list ratio. So it was about 96.6%. So, that means if you went and were buying $100,000 house, you maybe were getting it for, $96,600. So there are some deals to be had.
Mm-hmm.
Also, looking at the absorption rate, the number of months homes for sale on the market, if you look at last year, to start the year was about 2.7 months homes for sale. And, kind of to end the year in Fargo, we were sitting at almost 3.6.
Mhm.
So more inventory, more options, for an individual to consider. I think in your market, Kayla, I think that's, kind of changing already pretty quickly after the first of the year. I talked to a couple that I'm friends with that they are leaving the Fargo area and coming back here, and they put their home on the market. Beautiful, affordably priced twin home with not a lot of specials. I believe they had multiple offers, within the first couple of days.
Mhm.
I saw another agent in Fargo just posting they just had 7 offers on a very similar property. So I think, especially the ones that are decent, that are priced right and don't have a lot of specials, I think they're going really, really quickly in Fargo.
They are. I think I told you, I can't recall, but we had a client make an offer 15,000 over asking. There were 7 other offers and they lost out. Now, it was an FHA offer, so that could have been why too. People get a little nervous about FHA just due to more, hurdles to jump through, and the property has to be a certain, quality, things like that. But wow, 7 offers and you're 15 grand over and you lost. Like, I think it's telling that we might see a more competitive market as spring comes, as summer comes as well.
Yep, absolutely.
Mhm.
It's kind of interesting just to kind of contrast and show my market quickly in Fergus Falls. I mean, we saw some similarities
Mhm.
as well here, that we saw a little bit more inventory. We saw, again, a higher month's supply of homes, but again, we don't have the market you do because we lack new construction. Sold to list ratio, people are getting deals 93% or 92.8%, sold to list ratio as well, and a lot more days on market, 80 days on market. I think you guys were about 60, 61 days on market. So very interesting, the tale of 2 very, very different markets. But I guess at the end of the day, Kayla, the point is, as we always say, if it makes sense for you, whether it's a life-changing event or work, or your family's growing, or you need to downsize, it might be a good time. It's always a good time. But obviously get with your lender, your agent, whoever you trust, for some thoughtful market guidance, to help you reach your goals.
Mhm. And you never know, like, what you could be approved for, or what a payment looks like. Clients don't know a lot of times what a payment looks like on a property, especially around Fargo Moorhead because of those specials like we talked about. But you just never know. It could be way too high and you're like, it's not for me, or it could be within your budget. And I feel like a lot of times clients will see a home, they won't know the payment. They'll see a payment, they won't see a home. But when they see a house and they see the payment together, that's when they can really decide, okay, I feel good about this. I want to move forward. But you need to have all the information to make the decision, just like anything in life. Like, if you don't know how much down payment you need and what a payment looks like, why, you're not going to want to buy a house, and vice versa. So I think just continue to have conversations with the right people, the right experts, get all the information, the facts, the data, and then it's up to you. And you and I, Andy, we're not pressuresome salespeople. We're here to help. Like, we want to help people achieve their goals. We don't want people to feel pressured to do anything. And so for us, it's just more education and empowerment.
Right on. Well, Kayla, I think we have covered a lot of information, and given people a lot of things to think about. So as always, it's great to connect. And I know you've got a busy schedule this week, so get out there and serve your clients.
I will if you will.
See ya.
Bye.